All right, let's dive into one of the most important economic reports for any trader who's got their eye on the US dollar or gold. We're talking about the durable goods report. In the next few minutes, you're going to get the inside track on how this thing moves the markets, and more importantly, how you can actually use it to your advantage.
Okay, let's cut right to the chase. No fluff. Here's the playbook. This is the single most important cause and effect relationship you need to understand before this report hits the wires.
And here it is. This is your cheat sheet. Seriously. If the data comes in strong, better than everyone expected, the market sees a healthy, growing economy. That's going to push the US dollar up, and because gold is priced in dollars, gold usually goes down. Now, if the data is weak, you just flip that script. The dollar weakens, and gold gets a boost. It's that simple, and it's that important.
So, you've got the trading rule down, but let's take one step back. What in the world are these durable goods that can cause such a stir in the markets?
Well, the US Census Bureau puts this thing out every single month, and you can almost think of it as a confidence report. But instead of just asking people how they feel about the economy, it tracks what they're actually buying. And specifically, we're talking about the really big stuff, the items that people only buy when they're feeling pretty good about the future.
Yeah, this gives you a perfect idea. We are not talking about your weekly groceries here. We're talking new cars, huge commercial jets for airlines, heavy machinery for factories, even things like refrigerators and washing machines. These are major investments, and they signal real confidence from both businesses and everyday people.
So, why does Wall Street get so worked up over orders for things like airplanes and washing machines? I mean, what's the big deal? What does it really tell us about the economy as a whole?
Here's the secret sauce. This report isn't really about the past. It's kind of like a crystal ball for the future. I mean, think about it. If a bunch of companies start ordering new equipment, that means factories are going to be busy, people are going to be working, and the whole supply chain is going to be buzzing for months, maybe even years. It's one of the best early signals we have for economic momentum. And that early signal kicks off this very predictable chain reaction. A strong report points to a growing economy. A growing economy usually means a stronger US dollar. And that strong dollar, well, it acts like an anchor on the price of gold, pulling it down. It's this beautiful, simple chain of events that plays out over and over again.
Okay, now we get to the good stuff. This is the little detail that separates the amateurs from the pros. If you want to trade this report, you absolutely have to know this.
So you see that big headline number flash across the news? But you got to ask yourself, is every order created equal? Can one single order throw everything off? You bet it can. And that headline number can be a real trap for the unwary.
This right here, this is the pro's secret. That headline number includes everything, and it can get totally skewed by massive, lumpy orders for things like aircraft. Just one multi-billion-dollar airplane order can make the whole report look amazing, even if the rest of the economy is slowing down. That's why smart traders immediately look past the headline and go straight for the core data. That number strips out transportation and gives you the real underlying trend.
So here's your game plan. When the report drops, your eyes are going to scan right past that big flashy headline number. You're looking for the line that says, Durable Goods Orders X Transportation. That is the number that matters. That's the one that gives you the cleanest, most honest signal of where business investment is truly headed.
All right, let's put it all together now. Here is your final, actionable playbook for the very next time the durable goods report hits the market.
Okay, let's walk through it. The report is released, and that core number, the one we just talked about, comes in strong. Right away, the market sees this as a sign of a healthy, expanding economy. What happens next? The US dollar strengthens, and the final domino? Gold prices usually fall because of that stronger dollar. Once you nail this sequence, you're not just reacting to the news, you're anticipating it.
So there you have it. This isn't just some random number on a government report. It's a signal. It's a recurring opportunity. You now know how to decode it, how to find the real story inside the numbers, and how to anticipate the market's reaction. The next report is right around the corner. The only question left is, what's your move going to be?